Welcome to ForexTV.com. Today's Wednesday, April 22nd. I'm Tim Kelly with your New York Forex Market Buzz. Dollar is weaker against the euro and yen and gaining on the British pound at midday. U.S. equity markets are drifting between gains and losses. Gold is slightly higher and crude is trading to the downside, but not too far despite those numbers of the build. Now for a quick look at the headlines. U.S. house prices unexpectedly rose in February. That according to a report from the Federal Housing Finance Agency on Wednesday. The report showed a 0.7% month-over-month increase in U.S. house prices, following a downwardly revised 1% increase in January. Economists were expecting a 0.7% drop. Treasury Secretary Geithner says world needs the U.S. to recover. Treasury Secretary Timothy Geithner said on Wednesday that the U.S. bears the brunt of the responsibility for causing the financial crisis and that the country's economy needs to recover in order for the rest of the global economy to bounce back. Speaking at the Economic Club of Washington, D.C., Geithner said the International Monetary Fund is forecasting that world growth will contract 1.3% in 2009. U.S. energy inventories continue to climb. The U.S. weekly oil supplies rose to a fresh 19-year high. Gasoline and distillate supplies unexpectedly rose. That according to the inventory data released. Crude inventories increased 3,857,000 barrels compared to the 2,500,000 consensus. The U.S. Energy Information Administration, the EIA, said it was the seventh consecutive weekly build and brings the total U.S. inventories to 6 million barrels, the highest level since 1990. Over in the UK government plans to borrow a record £703 billion over the next 5 years, $269 billion more than the previous budget. That to continue supporting a suffering economy and counteract large job losses. The International Monetary Fund, as mentioned earlier, expects global economy to contract 1.3% in 2009. That's a downward revision from the previous forecast, calling for a contraction of between 0.5 and 1%. That according to the fund's semi-annual report. The fund also said that in 2010, the global economy should grow 1.9% versus a previous forecast for 3% growth. All G7 nations are expected to contract in 2009, with the U.S. economy shrinking 2.8% in 2009 and zero growth in 2010. Today we're joined by Omer Esiner, Senior Market Analyst at Ruesch International. Omer, thanks for joining us today.
Thank you for having me.
Omer, we had a little discussion before we came on air here, just trying to figure out the lay of the land. It seems that despite some disappointing news in the equity markets, equities did recover from the sharp losses in the futures this morning. Almost 80 points on the Dow, and I think about 8 or 9 on the S&P. Why don't we start there? What are your thoughts on equities? And that seems to be leading the currency markets. What's your take on where we are with equities halfway through earnings season?
Yeah, I think clearly we did have a nice run-up in equities since the beginning of March. I think, at Dow above even 8,100, it did look a little bit heavy. And I think what we're starting to see now is a little bit of a paring back in the optimism that drove stocks broadly higher over the last month and a half or so. So, I think right now, during the midst of earnings seasons, we will probably see the markets bounce around a little bit. But I think overall, over the next, I would say, 2 to 3 months, we're probably looking at weaker stocks. And frankly, the intraday move today, I'm not quite sure about it. As you said, there was some mixed news. I think, I would have probably assumed that the market would have sold off a little bit more heavily on the disappointing Morgan Stanley earnings. But I think we are seeing some resilience in equities today, and I think that's partly why the dollar is at the lower end of its ranges for the session, especially against the euro. But, I guess for the most part, I would categorize the outlook for equities as somewhat negative at these levels.
Yeah, we're just doing a data check here. I'm looking at Dow now up 20. It had been as low when it opened as down at about 80, up about 60. Haven't seen a day like this in quite a while, where we are bouncing between gains and losses at such wide margins. You expressed some surprise at the resilience of the market today. Do you think that might have had something to do with the housing numbers and housing prices, surprising to the upside?
Yeah, I think that's another, I guess, kind of a green shoot, as they might say, with regard to the housing market. We are starting to see some signs in the market that it's not in free fall. I do think it's still kind of an old number here, February. So I don't know how much we want to read into it, but there are a number of signs, I guess, that we can look at that are showing some signs of stabilization in housing, and I think that's a mild positive. But again, we're just to take a step back and look at the big picture, we're still stabilizing at extremely low and depressed levels in the housing market. So I think, again, what we need to really look at is the pace of recovery, and I think any way you slice it, that's probably going to be a very long and drawn-out process. So, it is, I guess, good news to see that the pace of declines are slowing, but I think it's really still a little early to get too optimistic on the housing market.
Right. That'll take a while, no doubt.
Yeah.
Omer, why don't we now focus on the effect of the markets today and the news today on currency, starting with euro. Euro right now trading around the 130 handle. Citing some of the inertia or the stasis of the ECB and the European Union. Are you surprised to see euro here at 130?
Yeah, I am. I think a lot of the rise in the euro, especially today, is due to the resilience in stocks. As you mentioned, we did see stocks open negative territory, kind of claw their way back to basically just above zero right now. So I think that's a positive for risk appetite. And then, historically, we've seen the dollar underperform during periods of improved risk appetite. So I'm really assigning the rise in the euro today strictly to the resilience of equities, and I don't expect that to last much longer. And so I think it's a pretty clear forecast for me, at least, that the euro is looking a little heavy at these levels.
Now, with regard to, I don't want to get too far into, because we can spend hours on this. There's some discussion about whether the ECB is actually dragging their feet too long here on monetary policy action, namely stimulus or quantitative easing. Is that something that you think will play into euro in the short term? And if so, how long do they have until they're going to meet on I guess May 7th, right? Is their meeting? Are we looking to that date for some information on quantitative easing at this point, or is that not in the cards in your opinion for ECB?
Well, you're right. I think the European Central Bank is widely seen as late in the game in terms of its monetary stimulus. The ECB was very late in cutting interest rates aggressively, while the Fed and the Bank of England were slashing interest rates. They had to really play catch up in that game, and now we saw both the Fed and the Bank of England accept the fact that they have no choice but to really quantitative ease or basically print money to help bail out their economies. The ECB has really dragged its feet in terms of quantitative easing. I think as its underlying economy continues to deteriorate, it's coming to the conclusion that it has no choice but to really join the Fed and the ECB in those actions. So, the Fed and the Bank of England in those actions. So I think, what we will see, by all accounts from all the comments that we've seen from ECB officials over the last couple of weeks, is that they will highlight a plan for quantitative easing at their next meeting in early May. I think, like you mentioned, the really delaying of the inevitable by the ECB has undermined confidence in the ECB, and it's, I think, exacerbated their economy's downturn. So this is clearly something that's weighing on the euro. It's going to keep its upside very limited, and I think as the ECB finally concedes and joins the rest of the major central banks in quantitative easing, it's going to see its confidence further erode.
So let's assume we get a statement on quantitative easing on or about May 7th. What does that do to euro?
Well, it really depends on what exactly they highlight. I think the likelihood, given the recent performance of the ECB, is that they'll probably approach quantitative easing in much the same way they approached monetary easing, and that's in kind of a piecemeal fashion and kind of a half-hearted approach to the quantitative easing. And I think if that's the case, then the market clearly will not be satisfied with what the ECB is doing to address its recession, and I think you could see the euro sell off further on that type of a development.
What do you think the short-term downside on euro would be?
I think a short-term target for euro dollar is probably in the 127 range. I would say in the next 2 to 3 months, that's very easily in the cards. I think, worst case scenario for the euro, probably 125 is certainly within the cards in the next 3 months.
Okay. Omer, it's probably a good time to jump over to sterling right now. Budget was released. Sterling kind of topped out at 150. Why don't you give us your thoughts on where you see sterling pound dollar going?
Yeah, I think you're right. Around 150, the pound was looking very heavy against the dollar. We did see some positive, or I should say, better than expected indicators out of the UK over the last couple of weeks, partly helping it rise to about 150 against the dollar. But again, at those levels, things were looking a little bit heavy. I think the pound's pullback to around the 145 region where we are right now was inevitable. I think a lot of that pullback was due to the budget that we got out of the UK today. Again, really, what they've done is downgraded their outlooks for the economy and for inflation, and at the same time, the British government is taking on a historic amount of debt. That leaves the pound vulnerable to further losses going forward. So I do think there's still some more downside to cable, probably in the 140 neighborhood, but I think below that, the pound will probably be supported by the fact that the Bank of England has really been a lot more aggressive in dealing with its recession than the ECB. So I think that will add some underpinnings to the pound going forward.
Okay. Now we get into the real tough one, dollar yen.
Yeah. Dollar yen, I think, as you mentioned, is a little bit harder to call. On one hand, I think what we will see is a continued pullback in global equities, a continued rise in risk aversion, and I think that's generally supportive of the yen as it is for the dollar. Having said that, though, the sheer magnitude of the depressing data that we've seen out of Japan over the last couple of weeks has kind of broken that close link between the yen and risk aversion just a little bit. And so I think the yen's upside might be a little bit more limited than you might otherwise think amid a backdrop of rising risk aversion. So, I think the yen will probably bounce around a range from around 100 to 95. I know that's kind of broad, but I think that's the best I can do right now.
Mm-hmm. Well, we've seen that range come into play 2 or 3 times in the last 6 weeks.
Yeah.
So not surprising, but about a month ago, I had many analysts coming on this show saying, "Hey, we're going to see yen 105." I don't hear that any longer. You don't see any scenario where there'd be dollar strength into that.
I think it's hard for the yen to get up to fall to 105, I guess, against the dollar. I think there is still some appeal of the Japanese yen as a safe haven currency, as a kind of a safe harbor during times of higher risk aversion. We're seeing that benefit the yen a little bit here in the last couple of sessions, and I think that'll still be somewhat of a draw for the yen, even though we are seeing its underlying fundamentals deteriorate so rapidly. So, the only way I see dollar yen getting around 105 is we do see kind of a broad, meaningful improvement in optimism and the global economic outlook, and I just don't see that in the near future.
Okay. I'm looking at Aussie right now, and I wanted to talk about the commodity currencies. You and I talked about that, and I might as well pick Aussie here at 70.82. So it got a little bit toppish at the 73.74 level. What's your take there for the using Aussie as the proxy for commodity currencies? What's your take there?
Yeah, I think the Aussie is probably still looking a little bit heavy at these levels. The Aussie enjoyed a nice run-up since mid-March along with all risk assets. So along with stocks, you've seen the Aussie really get, I think, a little bit ahead of itself. What we're seeing here is a little bit of a pullback. I think we're going to see that pullback in commodities as well. So I think, as long as there are serious questions about the global economic outlook, the outlook for global trade, I think then we're going to see the Aussie probably suffer. One factor that might underpin the Aussie a little bit, or at least decrease its downside a little bit, is the fact that we saw inflation come out today, really core inflation out of Australia. The core CPI came out a lot hotter than expected. And I think if you put that in combination with the recent commentary from the RBA, it suggests that their interest rate cutting campaign will be much less aggressive in the months ahead. So we could see kind of minimal rate cuts from the RBA, whereas we're pricing in a little bit more of an aggressive rate cutting campaign from them. So I think that might underpin the Aussie a little bit. It might outperform some of its other commodity currency counterparts, but for the most part, I still think the Aussie is best probably valued at around 68 cents around here.
Okay. Something tells me our next discussion here, Omer, is going to be on a discussion of inflation based on all this stimulus, and that'll be interesting. I think we'll leave it there for today. I want to thank you again for joining us today.
My pleasure. Thanks for having me.
This has been your New York Forex Market Buzz with Omer Esiner of Ruesch International. I'm Tim Kelly. Join us later this afternoon for PM Exchange right here on ForexTV.com.